Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back to Bazaar Morning Call. But for now, the market is doing not too badly, you'd have to say. Given the kind of pressure we've had globally, this is just a 30-point fall that you're seeing on the Nifty. The Bank Nifty is exerting a bit more of pressure. That's because of Kotak Mahindra Bank. But strip that off, and it's not a bad market to be in at all. A lot of stocks, Bajaj Finance, Axis Bank, HCL Tech, Bajaj Finserv, all topping the charts this morning. The Q1 earnings season has almost come to an end. So let's take stock of the overall picture. Gautam Duggad, the head of research institutional equities at Motilal Oswal, joins in. Gautam, hi, good morning. Before I ask you about the earnings, I just wanted your thoughts on the previous conversation that we had with the management of NALCO, where they said that, there's an immediate addition of 40 crores to their earnings because of the weakening rupee, and there's a huge shortage situation because of which alumina prices will continue to remain high. You think some of these names in the metal space will continue to give you good returns because of the way the industry dynamics are shaping up?
Hi, Sonia. Good morning. It does look like they are in for a good time right now. As you said, currency is also helping them. And as we have seen in the quarter, specifically regards to NALCO, the spread for them has been really good. The alumina position that they have and the prices of alumina, it's helped them. They've delivered a bumper quarter. But one always needs to keep a watch when you are in a deep cyclical sectors like metals, where stock prices move well ahead of earnings. And we have had a very strong last 2-3 years as far as the performance of metals universe is concerned. And in fact, just to extend that argument, what China has done last week or so, it looks like that this situation can continue for some more time. But must remember that now we are entering a phase where the base is going to look not so favorable for a lot of these metals companies. That being said, this quarter has been excellent for metals within our pack of sectors that we track. It's been once again one of the top performers for the quarter.
Okay, metals been good. Gautam, good morning. Your thoughts overall on the earnings season? More hits than misses, or the other way around?
No, it's been more misses than hits as far as our estimates are concerned. In fact, the story is the same. Not much has changed in the last 2-3 quarters. Even this quarter, the numbers as far as Nifty is concerned were dragged by corporate banks and Tata Motors. So the usual set of 3-4 stocks dragging the aggregates. But when I look at my Nifty estimates, we have seen 10% growth for all the Nifty companies put together, which was the expectation was 25-26%. But again, if you remove those 3 corporate banks, the numbers are in line. I mean, at around 25% Nifty growth versus expectation of 28-29, I don't think there is much to find fault with the rest of the 47 companies in the Nifty pack. EBITDA has been very strong across the board, whichever way you look at it, the broader universe on Nifty. But we must also recognize that we are sitting on a very low base. So the right way to look at a lot of these sectors in this particular quarter is going to be a 2-year CAGR, which doesn't make for a very exciting reading. And combine that with the fact that next quarter onwards the base is going to normalize. Plus there are some margin pressures which are emerging in a lot of consumption oriented sectors thanks to the rising commodity prices. So the quarter has been so-so in that sense. We have seen more downgrades than upgrades. 86 companies we have downgraded estimates by more than 3%, and only 40 companies we have raised estimates by 3%. And all of that filtered down to Nifty earnings cut of around 4-4.5%. So we are now at 550. Some important trends have emerged. Obviously, you can see that the NPL formation cycle in corporate banks, at least the worst seems to be behind now, with fingers crossed. And so for the quarter at least things haven't changed much, but the outlook looks slightly better now.
Okay, the outlook looks better now for the market as well. So we've recovered quite a bit now, just about, going to break into the green line.
You know what, Sonia? Yeah. Just look at corporate banks this morning. Axis is now seeing a massive intraday jump. Yeah. I think Axis, ICICI and SBI, these are the 3 stocks where you're seeing this move. Just look at that move on Axis. 2% higher, ICICI Bank also and SBI as well. So Kotak is still at the low point, but the corporate banks are doing well for the market right now.
Oh yeah, I think Axis at a new 52-week high, because I mean it's not done much if you look at the last 5-6 months, but suddenly it's broken out in the month of July and it's hit a new 52-week high right now. So keep an eye out on that. In fact, talking about 52-week highs, Sun Pharma is at that as well. At 608, Sun Pharma is now up almost 40% from the lows we saw in the month of May. If you can just pull up a 2-3 month chart. Gautam, are you hopeful about a turnaround in some of these pharma companies? I mean, Sun Pharma is still guided for a low double-digit growth in FY19. But do you think at least the worst is over in terms of issues for some of these companies?
Yes, I clearly think so, and that's been our view going into the quarter, that while the bad news has moderated on pharma sector, and base is also looking very good for them. In fact, for the quarter also the base was very helpful, and going forward also a couple of more quarters you see a very favorable base. Secondly, you have seen moderation in US pricing cuts as well, so you're not seeing double-digit price cuts in US, so that is helping. Secondly, some of the new launches plus some of the approvals that has come through, it looks like that the worst is clearly behind as far as pharma is concerned. But again, in pharma one has to be very stock specific. Each stock is very different and has very different operating dynamics. So we like Sun, it's part of our model portfolio, and the results were decent. Commentary was good. So I think, yeah, I mean, if somebody is severely underweight pharma, is the time to correct this.
Okay, if severely underweight in pharma, time to correct this. Thoughts on PSU banks, Gautam, because that is where, the price is indicating that the market's priced in the worst, and the stocks have not made fresh lows. Your thoughts?
So as I said in the beginning, as far as corporate banks are concerned, we have clearly seen two trends which are emerging. A, the fresh slippage generation has moderated substantially, and secondly, it looks like, at least from a second half perspective, that the loan loss provisions will come off. And given where the valuations are, you really cannot see much downside in a lot of these names. But do you go and load on to a lot of these names right away, or do you want to wait for a couple of more quarters to see that we have the worst is firmly behind? I would rather be more comfortable with some of the private corporate banks. We've been discussing every time that ICICI remains our preferred pick on the corporate banking pack, and that view hasn't changed. We still have ICICI Bank as a part of the model portfolio, and within PSU we continue to like SBI. But the quarter has clearly shown that indication that worst as far as NPL formations, slippages, loan loss provisions, a lot of these things seems to be falling in place, and valuations obviously look quite attractive. So some of the mid-cap oriented, public sector banks, you can see a good trading rally as well. But from an investment point of view, from a 3-year perspective, we are still more comfortable with private retail banks, because we think that the value migration on that side can continue for another 3 to 5 years at least.
Okay, so ICICI Bank is one of your top picks there, and you also like SBI. Before we let you go, Gautam, what are your other top buy calls right now? I mean, either post-earnings positives or in general just as an investment theme?
So Sonia, our view has not really changed. I still feel that consumption is going to be is going to see a big recovery. This has been a view for the last 15 months, and we are seeing increasing evidence of consumption recovery panning out both across urban as well as rural. And when I say consumption, I don't necessarily mean only FMCG. Even auto, we have seen very good volume growth. Consumer companies, FMCG, retail, we have seen decent volume growth. Of course, some of that is also led by the low base, but underlying trends are also improving over that side. So from a portfolio point of view, our positioning still remains slightly more tilted towards earnings visibility and quality plays, while I recognize that most of those stocks are trading at expensive valuations. But my view is that the value pack can continue to underperform till we see the elections out of the way, and given the fact that there are a lot of macro concerns also which are emerging at the margin, my view is that the quality pack will continue to outperform. What we like within that is obviously select auto names like Maruti, we like Eicher. Within consumption, our preference for Titan has been there for a long time. We continue to like Pidilite, Britannia, Page, and obviously some of the names in IT pack, some select names in NBFC we continue to like, even though the valuations from a near-term perspective are not leaving a lot of room for the upside. So one has to survive here, given that we are trading at 19.5, 20 times 1 year forward on Nifty, and quite possibly we may remain in this band before we actually roll over to FY20, which is still 6 months away. So market can remain in a very tight range, and select stocks, obviously bottoms of opportunities will continue to be there.
Okay, Gautam, we leave it there. Thanks a lot for joining us today. It was good talking to you, of course. Well, that's the view from Motilal Oswal. The markets recovered quite a bit. In fact, there's a decent rally going on right now, And I think some stocks are now showing decent move on the upside. We discussed corporate banks. Just pull out Repco Home Finance's intraday chart. That is one stock where there were, of course, a lot of shorts on Tuesday post the numbers, and that is where now beginning to see that stock actually making high point of the day. So there are a lot of stocks making the highs of the day right now. Kotak, of course, still dragging the bank nifty. We have Ashwini Gujral and Mitesh Thakkar back with us. Rajat Bose also joins us. Ashwini, this was your base call this morning, right, to buy the gap down on the Nifty Bank and then see if it works or not. It's worked in how? Courtesy corporate banks, but incremental thoughts from here on.
See, first of all, the market is not responding to the rupee today. It's responding to the dropping of the crude price and inflation and how that takes care of CAD, etc. So that way, corporate banks are leading this move, and the way these guys are moving, I think this could be a good day for the bank nifty right till the end, because you are sitting also on an expiry. So half the call worked where I expected IT and pharma also to work out. They're kind of lukewarm. So my sense is that once financials, which is NBFC and banks, take control, then the market is in very strong hands. And by the end of the day, you would have a much bigger recovery setting in. And this also shows that the market is finding buying almost below 11,400. So that bodes very well for 11,500 to get crossed at some point. Having said that, Bajaj Finance is a buy with a stop of 28.50, target of 29.75. You mentioned Repco, even Chola Mandalam, all kinds of NBFCs are moving up. So this looks like the inflation sort of play is coming back. Mindtree is a buy with a stop of 1,015, target of 1,060. And Jubilant Food is a buy with a stop of 1,500, target of 1,575.
Okay, well, a couple of these stocks are getting back to their all-time high. So Godrej Consumers, for example, is up about 2.5% right now. Its high is 1380 and it's now at 1326. Mangalam alerts us very helpfully that if the rupee weakens, of course, it's positive for some of these companies like Godrej Consumers, because 50% of their revenues comes from overseas. In any case, the domestic business has been doing very well. Now exports will also see, a pickup in terms of revenues because of the rupee weakness. Ashwini, any thoughts on how to approach some of these consumer names, Godrej Consumers, etc.? Would you trade it or buy it with an investment viewpoint?
See, today even consumption is doing well. So, Jubilant, etc. are doing well. And overall consumption is a secular story. So that way, I think rupee or no rupee, these stocks will keep going higher. Godrej Consumer, I think you can easily get up to 1,500. These guys are having mild corrections, and again you're seeing breakouts. So that way this market is much stronger. It's getting help from rupee sensitives, inflation sensitives. Consumption is already higher. So it's very difficult to see how we can come off very substantially.
Okay, your thoughts on Repco, Ashwini? I just refer to that stock because as we speak, it's making highs of the morning. So the thoughts on how to trade this? You refer to other NBFCs as well, but anything in particular on Repco?
See, Repco for many months has been in this 500, 620 type of band. We need to get past the 620 zone. I would much rather be in Bajaj Finance, Finserv, Chola Mandalams, things which are at new highs. So, but today looks like a bigger NBFC day than it looks like a big banking day, because on the banks, retail banks are creating a problem, but NBFCs are pretty much having a big run.
Okay, well, Mitesh Thakkar and Rajat Bose are also with us. Gentlemen, morning to both of you. Mitesh, what about you? What stocks would you want to buy right now? I mean, anything in the mid-cap space that catches your eye?
I think there's a lot of breadth, which is showing action. I think Ashwini is mentioning Jubilant, very strong breakout about this 1490, 1510 zone. So I think this could even immediately head towards 1600, 1650 levels. You were talking about Godrej Consumer Product. It's corrected from 1360 to about 1280. I think that correction is over and the stock is resuming its uptrend. So once it crosses 1360, I think 1440, 1450 can happen over here. Apart from that, the calls which I've selected are Cipla is a buy with a stop at 644 for targets of 685, and Bajaj Finance features on my list as well. Buy with a stop at 2834 for targets of 2960.
Okay, by the way, even Kotak has now started to make a bit of a move. Just see the intraday chart of that stock, because 3% lower, there's a minor bit of uptake from the low point is what you're seeing on that one as well. Ashwini, for the day, would you still avoid Kotak completely because it's showing downtick, or at lower level is this one also a buy, considering that the bank nifty is showing some improvement?
See, today if you just see the chart, it looks like a fresh breakdown. But if I am an institution, I want to load up on Kotak, today is the day I will load up. So that way, it's a very good longer term setup where there's bad news, there's fresh breakdown on charts, etc. But, if you want to buy large quantities, this is the day you buy, and it may finally turn out to be the bottom on Kotak for, several weeks or months.
Okay, well, Rajat Bose is also with us, so let's go across to him as well and ask him about his views. Rajat, hi, morning. What stocks would you be looking to buy now?
I have two buys. One is, of course, Jubilant Food, which I also feel that it is actually headed much higher from here. 1553 and 1578 are the two targets, and I would keep a stop loss below 1500 and buy at current prices. If it can even go beyond 1578, if it does, then 1615 to about 1620 would be the target going forward. And SRF August futures, I would buy, I would put a stop loss below 1938. 2010 and 2035 would be the two targets for SRF. The chart setup looks pretty positive. And I have one sell call on August futures, that is Hindustan Petroleum, HPCL. I'm expecting it to come down to 263.50. This on the 1 month futures chart, this is an important low, and this could well be retested. Put a stop loss above 275, sell this. We're expecting a target of 263.50.
Okay, by the way, the index stock of this week, apart from Sun Pharma, which has had a big move, is GAIL, and very quietly it's moved 8.5% higher for the week. Ashwini, we normally don't talk about this stock, but thoughts on the big move right now?
See, I think these guys were all killed by, subsidy fear. So that's probably getting out of the way. Now, above this 380-85 sort of zone, I think you can easily get back to, earlier resistances of 460, 470.
Okay, yes, GAIL doubled in the last 2 years, so it's actually a really slow and steady move that GAIL has seen, and good for investors as well. Thanks, gentlemen, for joining us. We need to get back to tracking some fundamentals now, and the stock that's on our radar is Brigade Enterprises. The residential performance was very strong for them. In fact, the numbers were good, a revenue growth of almost 26%. The profits have doubled this time around, and as I said, it's the residential segment that has done very well, while weakness was seen in the commercial portfolio. M.R. Jayashankar, the Chairman and Managing Director of the company, is with us. Mr. Jayashankar, good morning. Can you tell us what the expectations are as far as sales volumes are concerned? This time around, you saw almost a 40% growth in new sales volumes, and you're standing at a little under 500,000 square feet. What is the expectation over the next 6 months?
Yeah. I think I'm happy to say we're expecting good numbers in Q2 also. In fact, based on the volumes that we have done in the month of July itself, we have clocked close to 500,000 square feet. So, which means in the first half, we are confident of exceeding 1 million square feet as a sales. And also there is a good amount of leasing we have done. 500,000 square feet of leasing also we've done in across, National Stock Exchange will be occupying Brigade International Financial Center at Gift City. They'll be starting their operations there soon. Like that, we have ABB coming to one of our new buildings, and UST Global in World Trade Center Kochi. Like that, we have a host of new companies coming to our building, which we are happy to mention here. And personally, I feel the worst for real estate is over. Last 3 years has been bit of a recession. I think the real estate should see upside across the sectors.
Okay, so you said 1 million square feet is your targeted sales in the first half of FY19, right? So what about the full year? What would you be looking at?
Yeah. Full year, we are aiming close to 3 million square feet for the full year.
Okay, so 3 million square feet overall. For residential, it looks fine. The weakness really has come in the commercial sales, because commercial sales have fallen almost 30% year on year. even on a quarter-on-quarter basis, it's a big fall. Why such a slowdown? I mean, is the market slowing down on the whole?
No, not at all. See, commercial sale will have its ups and downs, whereas in Q2 we have done substantial sales. So that way, commercial sale is a bit difficult to compare on a quarter to quarter. So I think we are doing well in commercial sale also. In fact, we have 6 projects of close to 2 million square feet, which are meant for commercial sale segment.
Okay, so 6 projects worth 2 million square feet lined up for commercial sale. So would you hold on to your guidance? You had a guidance that lease rentals will reach about 1,000 crores over the next 3 years. Would you be sticking to that?
I think thereabout. I can't say exactly, but I think we are aiming somewhere between 800 to 1,000 crores in 3 years' time, based on the projects we have, and on the assumption that the leasing will be 90 to 95% level. That is the assumption and disclaimer.
Okay, fair enough. Just wanted an update on whether you have found any strategic partner for your hotel business, any talks that are currently underway, and anything in this calendar year itself?
They are at a very preliminary level, but we are hopeful in this financial year so something should be finalized. We are also keeping our fingers crossed on that. And currently we have 1,000 keys operational, and this financial year FY19 will be adding about 218 keys in Cochin, 4 points by Sheraton Kochi, and in the next FY20 we'll be adding another 300 plus rooms, and by FY21 we will have 2,000 plus keys operational. That should bring in a fairly good amount of revenue of 500 to anywhere between 500 to 600 crores in 3 years' time.
Okay, so you're saying that by the end of FY19 you will finalize a strategic partner for the hotel business. By when can we expect the hotel business to turn into the black, either at the bottom line or at the EBIT level?
No, you can say the hotel business is doing fairly well. Only if you consider the depreciation of new hotels, because we have 2 new hotels which have become operational in the last 2 years. If you consider the depreciation of that, it may not be. Otherwise, all the hotels, even the hotels which have started few months back, they are all operational cash positive. So that way, we are fairly confident our hotel segment should do quite well in the coming years. And right now also they are doing quite okay.
Okay, all the best. Thanks for joining us and giving us that update. That's the word coming in from Brigade Enterprises. It's the commercial business that's under quite a bit of pressure, but residential is not doing too badly. We'll take a short break on that note. There has been a big collapse in the commodity markets overnight. Manisha Gupta will join in to give us the latest commodity trades. Also, we'll continue tracking that big story, the rupee depreciation. Ashima Goel, member of the Prime Minister's Economic Advisory Council, will be with us in a bit.